Every tech boom leaves a trail of transformation. First it was Bitcoin, now it's AI. And the same operations that once chased crypto are fueling the next gold rush. Iren, formerly Iris Energy, is one company leading that change. The Australian company has a major footprint in Texas, where cheap power and open land are fueling a new wave of AI-ready data centers. And they're not alone. The Electric Power Research Institute projects U.S. data centers could consume up to 9% of the nation's total electricity by 2030, more than double today's levels. AI's demand for electricity is so intense that hyperscalers are now looking to Bitcoin miners for help. These companies already control massive energy contracts and power-dense facilities, the same infrastructure AI needs to run advanced models. So instead of competing for grid capacity, some miners are partnering with tech giants to repurpose their sites for high-performance computing. I sat down with Iren Chief Commercial Officer Kent Draper to talk about what's driving that transition and how they're reusing their mining sites to power the AI revolution. So, how do you define Iren today? A Bitcoin miner, a data center operator, or a broader energy tech company?
Yeah, it's an interesting question. We've worked very hard over time to build up optionality in our platform to be able to monetize it in various different ways. I think across all of those industries, if you look at what is the key pinch point in the sector at the moment, it is access to land, power, and data centers that are capable of handling power-dense computing applications, all of which we have in abundance within Iren. So we are, in a sense, very unique. We have most recently been expanding rapidly in our AI cloud services sector. So this is where we own GPUs and provide GPU as a service to third-party customers. That has been growing extremely rapidly. We're seeing enormous demand there and continue to expand. And within that segment, we are unique in the sense that we are vertically integrated and own our own data centers. So if you have a look at us relative to peers in that sector, CoreWeave, Nebius, etc., who don't typically own their own data centers, we do have some distinct, what we think are advantages relative to the end customer. Then if you look at us within the Bitcoin mining space, which is what we've been involved in historically, again, very unique relative to others that are making a transition to AI. Because first of all, for us, this isn't really a transition. We've always had in mind multiple different use cases. And so we just consider this a natural extension. And secondly, we do have that AI cloud services vertical, whereas most of the people coming out of the Bitcoin mining sector can really only monetize the data center space that they have through AI co-location. So in all senses, we're kind of a unique company and very different from everybody else that operates across either of those sectors.
Mm-hmm. And you already had the land, the power, and the cooling. How much of this pivoting was strategy, and how much was simply recognizing that you were sitting on the right assets at the right time?
Yeah, this, as I said earlier, this isn't a pivot for us. This has been the strategy from day one. So going right back to 7 to 8 years ago when the business was founded, it was very much around the thesis of fast growth in the digital space, increasing digitization of everything, increasing data dependency, and the fact that you get these exponential growth cycles in the digital world that occur over very short periods of time